Hello and welcome to another update video about the DXY. The DXY has recovered a bit after hitting the 1-to-1 ratio there, the 100% extension to the downside, which, in my interpretation was the C wave of circle A here, of a larger third wave to the downside. Okay, so the idea is, wave 1 moved down, bottomed in December last year. Then we have our wave 2 corrective rally, and we're now likely in the third wave to the downside. I have to say, however, this is not necessarily high confidence because this is only a diagonal pattern to the downside. It's only a diagonal, which means these subwaves are made up out of corrective structures, and they are not clearly moving in impulsive ways. Okay, this A wave might have been a 5-wave move down, so it's looking good. That indicated a B wave bounce should occur from here, from the $103.62 level. And yep, we've seen that bounce, and now a C wave down would follow ideally. But first of all, let's get this B wave completed. But overall, yeah, I'm still, let's say, short term, very short term. I assume we get a larger bounce now, bit of a bounce, but then we should see further downside continuation in the coming months. But overall, if we zoom out a little bit further on the DXY, while the chart has broadly done what we wanted it to do, it's actually just been moving sideways, okay? So we've had this initial 5-wave move down, and then the 3-wave bounce, okay? That all happened nicely. We have an A down, B up, and because the A wave is a 5-wave move down, and the B wave is a corrective rally, expectations are for a C wave to continue to the downside. But what we can never rule out is that the B wave extends a bit higher. So that would be the short-term bullish count, but I have no reliable bullish scenario other than maybe wave C as a diagonal. Then we would have, but this is alternative. That's the alternative count, which will only become more likely with a sustained break above $105.94. But in this count, we have a yellow B wave low. That's wave B of the larger B wave. Down here, that low in December last year. Then this would be wave 1 up, wave 2 down. A, B, C of 3, 4, 5. So we have a 5-wave move down now, possibly to $110 or more. But for now, this is not expected as such, but it is worth to consider it. I mean, I don't show you any wave counts that are unreasonable, so it definitely has a chance. But first of all, we've seen 5-wave movements to the downside, and we are below resistance. So I'm currently, short-term watching for higher anyway, but I'm watching for possible resistance in this Fibonacci resistance area, which is defined between $104.75 and $105.94. From here then, as I said, a C wave down should happen. I will now take out this white box because this was designed to tell us where roughly the decline, this initial C wave of wave A of wave 3 to the downside, where this should finish. And it basically bounced from the 100% extension, which is the common target. Now we are watching for a B wave bounce, which consists of 5 waves in wave A, it seems, a B wave pullback. And if that B wave holds above the last swing low that formed at $103.62, further upside is expected. And it is expected because of the 5-wave move up and because we're holding micro support. And support is between $103.85 and $104. It's just the micro support zone in the very short term. And someone made me aware of it. This looks like an inverse head and shoulders pattern. Correct. The right shoulder might be forming right now as B wave. So, and the breakout point or neckline, you could call it, is at around about $104.60. So yeah, that's the update about the DXY. Hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe. And yeah, enjoy your day. Thank you very much. Bye-bye.